Did you know that you can withdraw money from your RRSP completely tax-free to buy a home? Stick around to find out how it works. Hi. My name is Kat and I'm a chartered professional accountant. On this channel, we discuss Canadian tax, accounting, and personal finance, with the goal of helping you keep more of your hard-earned money in your own pockets. Today's video is all about the home buyer's plan. We'll go over what the HBP is, the main benefit of the HBP, and how the home buyer's plan works, including the criteria for participating in the program, how much you can withdraw tax-free, as well as how repayments work. At the end of the video, I'm going to share 3 tips to help you pay the least amount of interest possible when buying your home. So let's jump right in. First of all, what is the home buyer's plan? The HBP is a program which allows you to withdraw money from your RRSP completely tax-free for the purpose of buying or building a home. You can then pay back the amount you withdrew over a period of 15 years. This is very interesting because there are actually only 2 ways to withdraw money tax-free from your RRSP: the home buyer's plan and the lifelong learning plan. Any other withdrawal is taxable. If you'd like more information on RRSPs, my video all about them is linked in the description box below. The main benefit of the HBP is that you're essentially getting an interest-free loan to help pay for your home. In other words, instead of borrowing money from a bank and having to pay interest on the loan, you borrow money from yourself at no cost. Let's look at an example to see the impact this can have. Let's say you want to buy a home that costs $500,000. In Canada, the minimum down payment for a house purchase of this amount is 5%, so $25,000. Now let's assume your mortgage is for a period of 25 years at a rate of 5%. If we plug these numbers into a Canadian mortgage calculator, the result shows that the total amount paid over the 25-year period is about $828,000. This means that you'll have paid over $353,000 in interest. Now let's say you use the HBP to put an additional $60,000 towards the down payment, bringing it up to $85,000. If we plug this into the same mortgage calculator, the total amount paid goes down to $724,000 and the interest to $309,000. This means that, by using the HBP, you saved almost $45,000 in interest on the purchase of your home. Before we go on, if you've learned something so far, please take a second to give this video a like, it really helps the channel. Alright, next, let's dive into the specifics of how the home buyer's plan works. For starters, you have to meet 4 criteria to be able to participate in the program. 1. You need to be a Canadian resident. 2. You need to be a first-time home buyer. This means that you didn't live in a home owned by yourself or your partner in the current year, nor in the previous 4 years, except 30 days before the withdrawal. Third, you need to have a written agreement to buy a qualifying home, and it must be acquired before October 1st of the year after you make your first withdrawal. Fourth, you have to intend to occupy the home as your principal place of residence within 1 year after buying or building it. If you meet all of these criteria, let me know down in the comments below. Once you've confirmed that you meet all the criteria, you can make an RRSP withdrawal under the HBP using Form T1036. I'll put a link to the form in the description box below. As of April 16, 2024, the amount you can withdraw tax-free is $60,000. Prior to this, it was only $35,000. Keep in mind, however, that the money must have been in your RRSP for at least 90 days before you withdraw it. If it's been in your RRSP less than 90 days, you won't be able to claim the usual tax deduction for an RRSP contribution. Finally, let's talk about paying the money back. As mentioned earlier, you have up to 15 years to put the money you withdrew under the HBP back into your RRSP. Normally, the repayment period starts 2 years after the year in which you make your first withdrawal. However, if you withdraw between January 1st, 2022, and December 31st, 2025, your repayment period starts 5 years after your withdrawal. For example, if you make an HBP withdrawal in 2025, your first year of repayment will be 2030. Keep in mind that even though you have 15 years to put the funds back into your RRSP, you can actually repay the full amount at any time. So how exactly do you make repayments? It's simply by making contributions to your RRSP. Then, when filing your tax return at the end of the year, you fill out Schedule 7. This is where you'll indicate how much of your RRSP contributions for the year you want to designate as HBP repayments. You'll need to designate a minimum amount as repayment each year, otherwise, it'll be added to your income and taxed. You also have the option of designating more than the minimum amount as a repayment. We'll look at an example of how this works in a second. First, it's important to note that repayments do not affect your RRSP deduction limit and cannot be deducted on your tax return. The reason for this is that the amounts were already deducted when you first contributed them to your RRSP. Since you're just putting back the funds you took out, there's no additional deduction permitted. You should also know that it's possible to participate in the HBP more than once, as long as you have repaid all of the amounts previously withdrawn under the program, and that you meet all of the eligibility criteria we discussed earlier. Okay, now let's look at an example of how repayments work. This is Nicole. In January 2025, after ensuring that she meets all of the required criteria, Nicole withdrew $60,000 from her RRSP under the home buyers plan. Since she withdrew in 2025, she will need to make her first repayment in 2030. Her minimum required repayment will be $4,000, or $60,000 divided by 15 years. Nicole will need to contribute at least $4,000 to her RRSP in 2030, and use Schedule 7 to designate it as a HBP repayment. Now let's say Nicole forgot to save up for the repayment and wasn't able to make a contribution to her RRSP in 2030. The $4,000 will be added to her income for the year, and she will be taxed on the amount. Her HBP balance will go down to $56,000 and future minimum repayment amounts will remain as $4,000. On the other hand, let's say Nicole was able to contribute $10,000 to her RRSP in 2030. She can designate $4,000 as HBP repayment and leave the remaining $6,000 as a regular RRSP contribution, which she would be able to deduct on her tax return. Once again, her HBP balance will go down to $56,000 and future minimum repayment amounts will remain as $4,000. She could also designate the full $10,000 as HBP repayment. This would mean that her future minimum repayment amounts will be lowered to just over $3,500, or $50,000 divided by the remaining 14 years in the repayment period. Alright, now that we understand how the home buyer's plan works, I'd like to share 3 tips to help you pay the least amount of interest possible when buying your home. First, if you qualify for the HBP, you most likely also qualify for the First Home Savings Account, or FHSA, because the criteria are very similar. You should therefore go ahead and open an FHSA to be able to benefit from additional tax savings. That's because contributions to the FHSA are also tax deductible, just like contributions to your RRSP. For more information on the FHSA and how it works, have a look at my video linked in the description box below. I'll also be making a video comparing the HBP and the FHSA in the coming weeks, so stay tuned for that. Second, when the time comes to buy your home, you and your partner should combine your RRSP withdrawals under the HBP. This will allow you to put a higher down payment on the home, therefore paying less interest over the years. If we assume that you both withdraw $60,000 from your RRSP under the HBP, you're effectively doubling your down payment from $60,000 to $120,000. If we use the same mortgage calculator as in our example at the beginning of this video, combining your HBPs will save you over $44,000 in interest over 25 years assuming a rate of 5%. Third, combine withdrawals via the home buyer's plan with those from your FHSA, allowing you to make an even bigger down payment on the home. You can withdraw up to $40,000 from your FHSA, so that's potentially $100,000 for your down payment if you also withdraw $60,000 under the HBP. Once more, using the same mortgage calculator, you're looking at over $55,000 in interest savings. And if your spouse also participates in both programs, you can potentially withdraw up to $200,000 combined. This will bring your savings up to over $130,000 on a $500,000 home, at 5% interest over 25 years. That's a huge difference. Imagine what else you could do with $130,000? That's money which you can invest tax-free in a TFSA, or in an RRSP for your kids, or used to pay for things like vacations, a new car, and so on. Bottom line, using the HBP and FHSA to put a larger down payment on your house can literally help you save tens of thousands of dollars. So there you have it. We discussed what the home buyer's plan is, the main benefit of the HBP, and how it works, including the criteria for participating in the program, how much you can withdraw tax-free, as well as how repayments work. I also shared 3 tips to help you pay the least amount of interest possible when buying your home. That's all for today's video. I hope you found the information helpful. Don't hesitate to ask your questions or submit special requests for future videos in the comments. Be sure to hit that notification bell if you want to be the first to know when a new video is released. Thanks for tuning in, and I'll see you next time.